Good morning, everyone. Welcome, welcome. It is Friday, the first Friday of the month, May 5th. You know what that means? That means that the non farm payrolls are going to be out today. They came out this morning. We traded it live with our room and just had a long from 96, right? 96, 97. We called it out. Everything was all good. Ran it into the 12s. Very, very good trade overall. So if you want to go check that out, check out tradeproacademy.com and come into our live Zooms. We'll do events like these. We'll do mornings, right? We're going to jump into the morning room here after this. But main event today was non-farm payroll. So let's discuss that. Let's see what that means for us. And then we'll go into what we have for the market. So the expectations were 185,000 jobs added in April, down from 236 added in March. Sorry, people are just yelling outside here. Savages. Don't they know I'm doing an update? So, again, 185,000 jobs were added in April, down from 236 in March, right? That was the expected number. The actual number came out 250 something, right? I believe it was like 253 or something. So, very, very large beat, right? We were expecting a cooling in the labor market, but you can see a very, very strong beat. The prior month was revised lower. It was much lower than the average monthly gain of the last 6 months of 344. Still, it is like this month is still lower, but again, much higher than expected, and we got some bullishness into that market. Now, generally, the economy needs to add about 100,000 jobs to absorb new entrants into the workforce. The higher the number of new jobs above the figure, the harder it is for employers to hire as demand outstrips supply in that point. So, with the labor market remaining really tight, the Federal Reserve has felt confident in its inflation fight, raising the interest rates without inflicting too much damage on the economy. And remember, Jerome Powell in one of the press conferences mentioned that, hey, you know what, unemployment is expected to go up fairly drastically to combat this inflation ordeal. Now, unemployment expected at 3.6% in the prior month, right, came out at 3.4%. So, very good unemployment number. The figure before that was 3.5%. So, this past Wednesday, the central bank increased the policy rate by another 25 bips, going to the 5 to 525 range. And this is the highest since 2007. Jerome Powell also said there were signs that supply and demand in the labor market are starting to come back into a better balance, but remains fairly tight. So, the unemployment data, like we were talking about, wage growth will also be eyed with average hourly earnings expected to rise 0.3% month over month in April, unchanged. And what this generally means for us, right? We got some bullishness into this. The Federal Reserve did not mention pausing hikes realistically. So the good news is still good news, right? There's not that much demand for very aggressive rate hikes to come realistically. So even with good job numbers, that doesn't necessarily mean, oh my God, we're just continuing to hike. I think that things do stay still fairly flatline, and the Fed is still looking for that data dependency. Now, another thing to talk about is earnings, right? Apple earnings, our monster, right? Our giant shares rose really aggressively, about 2.5% in the after hours trading on Thursday, as the tech giant reported Q2 results that topped muted analyst expectations, unveiling a $90 billion share buyback program, right, raising its quarterly dividend. And revenue was helped by iPhone sales and services, though some weakness was seen in Mac and iPad segments. And the overall sales fell for the second quarter in a row, but they said that we expect our June quarter year over year revenue performance to be similar to the March quarter, assuming that the macroeconomics outlooks do not worsen from what they project today, said CFO Luca Maestri. So Tim Cook, CEO, said in a follow-up interview that the iPhone maker remains extremely prudent on hiring, just at a lower clip level than they were before. So big tech overall performing extremely well. This is what we were talking about, looking for a little lotto punt for earnings, for looking for weeks out, right? I'm not looking for a weekly options play. And I think we're going to get some decent returns from that. Other equity names that we were talking about, right? We have Amazon on the list, on the docket. Amazon doing fairly well, picking it up that swing on May 2nd. I think there's a decent potential if we can get above 106 on Amazon. But overall, right, big tech names are still sustaining a lot of the upside in the overall market. Artificial intelligence, right, in the headlines, naturally, Google and Microsoft doing pretty well from that standpoint. So we'll see how this kind of shapes up because again, big tech doing really well, regional banks doing really poorly, financials are in disarray realistically. So US federal and state officials are also looking into whether market manipulation has prompted a recent volatility in banking shares. According to Reuters, with short sellers raking in about $380 million in paper profits on Thursday alone from betting against regional banks, right? This massive sell-off, brutal sell-off saw PacWest, PacW is the ticker, and Western Alliance WAL plunge 51 and 39% respectively as investors grew nervous about strategic options as well as the possibility of stockholder wipeouts. So again, still a decent bit of downside, but if you take a look at the larger banks, right, they're still sustaining fairly well. There has been some downside, right? JP Morgan tumbled from that 142 area, but still sustaining fairly well here. Some decent volume on the downside. So from the jobs market to the Fed potentially slowing down the hiking, with tech being strong, regional banks being really weak, and overall financial sector being in disarray, there's no clear cut macroeconomic outlook on this as of yet. Now, if we go day by day, today is Friday. Remember that Friday typically is a good day for the market, right? Typically, we do see some bullishness. Now, if I'm looking at the S&P 500 futures, this is where we trade mainly predominantly in our futures room. I'm going to be looking at as long as we can sustain 409698 region on the S&P futures, I think that there could be some more upside in the market targeting areas like 4124. If that manages to break above, then I think a lot of upside is being priced in. I think the final level where the bulls are going to try this is 4084. Under that, we can potentially see a tumble. I don't know how Friday is going to shape up, but typically we like to end the week on a good note on Fridays. So, with that being said, um, check us out at tradeproacademy.com. Always a 7-day money back guarantee if it's not for you. But every day we trade so far, pretty good start to the Friday. We swung some futures from last night from the 64, almost the lows. So doing pretty well with that. And I hope to see you guys in there. Check that out. And don't forget, in the coming weeks, we're going to announce a live recording of a futures introduction course that I don't think anyone should miss realistically. So keep an eye out on that. Join these lives to get more updates and check us out at community.tradeproacademy.com for our free Discord access. So hope everyone has an amazing weekend, has an amazing Friday, and I'll catch you guys in the trading room that we're going to open in a few minutes. So take care and chat soon.